Famous Dave, Famous Dave, Famous Dave, Famous Dave, Famous Dave.
Welcome to Lincoln News with your host, David Lincoln. Now here's David with the top 3 news stories of the day today.
Enough of that. Welcome to the Short Vol Show, and today is the 18th of September, otherwise known as Reverse Split Day for UVXY. So let's check out the action over on UVXY here, and we do have a down day in the VIX, with the VIX currently down 82 cents, and that's kind of corresponding to a little pop we had the day before. There were some rumors, actually not rumors, but there was a tweet that said that the president was going to come out and speak about tariffs after the close, and people were a little spooked. You can see behind me, I'm not totally in the way, but I'll move over just a little bit, the recent action in the VIX. So we saw stuff kind of rolling downwards and then a pop yesterday. If you were... well, in hindsight, if you were smart, you would have sold into the pop because we're down a little bit lower after that. Like many people, I was kind of waiting for UVXY to undergo the split to initiate some new options trades in there. As of 12:30 today, Eastern Time, UVXY is down 77 cents, now trading 39.18. And that's a funny chart next to me. Obviously, there is some price data from the pre-split that got put in there for some reason. So if we take a look at the chart, we can see for the this is going to be your VIX Central chart for the term structure. You can see as we come into the expiration that there is steep contango between the first month and second month. However, you can notice that between the second and third month, there is not that much going on, less than 3% right now. Now, I expect that to change quite rapidly. If we move over here to the ProShares site, and we look at the daily holdings, we can see that currently the holdings are almost entirely the October future, and that is due to expiration coming up imminently. And so our focus should not really be, although it's important to note that there's steep contango, our focus as we move forward should, of course, be between the second and third month on the term structure here. And almost as important as checking out the slope between these 2 months is just checking out how much space there is between the two futures and the spot price. And we can see that there is a decent amount of space there. There's let's see, about $1.80 between the OCC future and spot, and another 45 cents up to the November. So this area is underneath the two futures, between the two futures and spot is a decent amount of space, and that is almost more significant when we're looking at this than the contango between the two futures at this moment, because we know that as soon as we roll through expiration and these funds start actively rebalancing, that this contango will typically increase. So I wouldn't be too off-put by the fact that there's only 2.86% contango between the second and third month futures right now, because that is expected to expand rather rapidly. My focus today, as has been the focus of a lot of people in the markets has been these Canadian MJs, which are cruising all over the place once again. We just had Aurora reopen, and I don't know. I think some people thought we were going to get a little more pop on this one than we actually did. It reopened, I believe, around 760, in the 760s, 770s, and then resumed back up above $8, which is around where it was trading right before the right around the close yesterday. So it hasn't gapped up a whole lot since the close yesterday, which I think a lot of people expected it to kind of gap up. However, TLRY, not so much the case. That thing has exploded to the upside and is up 23% today, up $27. So you can see on the title of this video, I'm talking about balancing life and trading. And I just had a particular experience I wanted to relate to you. Yesterday, I was working, doing a banquet thing for a resort, and I was loading a whole bunch of stuff into a truck to bring it from one area to another. And in the meantime, I was looking at my phone. I was short a strangle in Tilray, and I was looking at my phone as I was trying to work. And it can be really rough, depending on what the other things you do in your life. It can be really rough to trade at the same time. So you really have to look forward and see what your schedule is and take that into consideration when you're going to be putting trades on, especially options trades that are time sensitive and that you have to kind of babysit. You don't want to be putting on stuff and then not be able to watch it, because that can be crucial between profitability and loss. So, people talk a lot about how it's perfectly feasible to trade and have another job, but that really depends on what kind of trade you have on. Some sort of trading can be managed with limit orders and stop loss orders and things like that, but if you're trading something crazy like TLRY, stop loss orders in the options when the markets can be like up to $1 or $2 wide is going to kill your profitability, and it's really not feasible. So we all have to balance. We all have busy lives. Mine's no busier than anybody else's. Well, maybe it's busier than somebody else's, but I'm not claiming that my life is like so much busier than yours. We all have busy lives, and the key is, how do we manage our time and look ahead so that we can manage our trades? And you really have to do that. It's crucial to being successful as a trader. And we all wish we had, I think, 48 hours in the day sometimes, because there's just not enough time. But I'd rather have a life of where I feel like there's not enough time to fit everything in than just to be sitting around doing nothing, which is unfortunately what a lot of people do. So Tilray today, I just want to go over the position I had on yesterday and what's happened since then. So if we look at the chart here, which is behind me, and we back that out to the last 5 days, let's take a little look-see here. So that doesn't look like 5 days to me. That looks like 2 days. All right, so the stock was kind of hanging out in this range a little bit a couple days ago, between around 110, sort of trading back and forth. And I sold a strangle. I first was messing around with a really wide strangle, like the 67-160 strangle. And then I got more aggressive and I tightened it up to the 87-128 strangle. And that's what I was taking heat on yesterday. Yesterday, I looked up and stock was pressing up towards 115, 116, 117, and got up to like 120, and here I am short the 128 calls, and that was getting too close for comfort for me. So I ended up just paying the offer. And when you're trading really small and it's not a huge amount of your portfolio, you can feel comfortable doing what you need to do. And I felt like I needed to pay the offer, and it worked out, because the offer became the bid fairly quickly after that. the amount of aggression that you put in, or the amount of aggressiveness that you put into how much you're bidding or offering something for, kind of should vary based on the activity of the stock. Now, Tilray being very thin and moving like crazy all over the place, well, if you want to trade it, you're going to have to be aggressive sometimes, because something that's there for a second won't be there 10 seconds later, and it's just the way of it. And it's exciting to me to trade exciting stocks, but I know that I have to keep it small, and I trade something like this a lot smaller than I would trade something that I had more confidence in the liquidity and that it wasn't going to move as fast. You know, if you're trading Apple, it can move around, but you can feel pretty comfortable that you can get filled mid-market on everything, that it's not going to move super, super fast. Because with something like Apple, each tick represents so many thousands or millions of dollars, and there are so many people that are focused on it that it creates a a kind of push and pull in the market, and it doesn't move super, super fast. Tilray, however, you can tell that there's people short it, and then they panic and buy it back and reshort it again, and all this sort of stuff going on, and it's all over the board. So you don't want to put yourself in a situation where your back's against the wall. You want to figure out what size is appropriate for you to trade, and then maybe cut that in half, I would say. I want to thank everybody who has been my supporter on Patreon, and thank you for your understanding. In the last week or two, I've been focused away from you guys and the trading world for just a teeny bit, but no worries. That will only last a couple days or weeks, and I get on here as much as I possibly can. This is my passion in life, and sometimes to pay the bills it takes me away from it for a second, but I know that you understand that. As far as the VIX and short vol trade, let's take a look just once again at the VIX, and let's think about where we kind of are here. So to do that, I'm going to back out the chart to let's look at a 3-year chart, okay? And just put things in perspective. Well, if we look at ourselves on a 3-year chart and volatility here, looks like we're kind of right in the middle. It's not super high at all. Some people would say it's super low, but to me it's not super low, because I was in that environment all last year where we're like last year, if the VIX got to 14, that was a huge sale, and it would be back down in days if it got to 14 or 15 even. You can see it would blip up towards there, and then it would be right back down. So 1286 is kind of just sort of like an average range to me. Now, once again, some people would say, well, the average VIX is 17 or 18, and anything below that is a screaming buy. Well, it's a good buy. It's good buy your money if you're buying 12, 13 and holding on to it, because as we know, there is not a real good way to own volatility in the VIX. All of these instruments have this decay and slippage to the downside. So the only time you would really want to buy a 12 or a 13 is if you're going to do it for a very brief period of time. I'd say less than 48 hours, and if you are pretty sure that you're going to get some bang for it, because otherwise you're going to start bleeding, and over a time period it's not going to be profitable to own the vol. Now, some people are good at picking when the time to own the vol is, but if you want to play with the odds, being short it has the odds in your favor more than being long it. Okay, so we looked at the VIX for a second, where we are in that. Let's look at the rally for a second, look at where we are in that. And what I mean by that is, like, you know, people are saying, oh, this market's, the rally's got to run its course at some point. We've been in a bull market too long, and things are going to sell off. I've also heard a lot of stories saying that sort of the Trump era is about stimulating the markets in a way that we're going to have a boom and a bust cycle, and the bust is going to come at some point. And, you know, that famous quote, markets can remain irrational longer than you can remain solvent. And so you're going to see, if you can pull up tons and tons of videos on YouTube of people saying that the end is near and it's going to happen, and people love that stuff, and they eat it up, and they love to try to call the top. But once again, not a real profitable trading decision if you're calling the top. You can call it, that's one thing, but if you sell it, if you sell into it, you get run over most of the time. So looking at this chart, we still seem to just be in a real bullish situation here. That's the SPY. Let's take a look at NASDAQ. NASDAQ looking the same way, still just kind of straight up. There's your SQ, your square. This is RH. This is the one I was sort of trading for earnings here. And nothing for me on this one right now. This is another very thinly traded one. All right, so Tilray, once again, is here. So UVXY, okay, so it's split today, but we are not, the new strikes have not been really pulled out to trade. So if we go out to the option screens in UVXY, essentially, it's just the quote-unquote old options. The options that are based on a $39 issue have not been put up yet. So if you're trading UVXY today, what you're going to have to do is you're going to have to divide the price of the underlying by 5, and that will correspond to these option prices. So any of these screens, and it's kind of indicated here on Thinkorswim, it says 20 out of 100. So basically, these options correspond to 1/5 of the price of UVXY still. So they're basically the same options as yesterday, and so you need to divide the number by 5 in your head. And the other thing with these options is they're going to become more and more illiquid, because tomorrow the quote-unquote normal options, the standard options for the new post-split will be listed, and those will become the most liquid options. So for those of you who are waiting for the split, you probably got to wait one more day to initiate those options trades. Now, there will be some action as people try to roll this stuff out, but this stuff will become illiquid pretty quickly. So I would recommend waiting until the new options come out to initiate anything. And unfortunately for me, I wanted to sell some volatility yesterday. I wanted to get short. I wanted to buy some put spreads in UVXY, but I decided to hold off. I should have just gone ahead in VXX and put the put spreads on, but I kind of wanted to put them on UVXY where you've got 1.5 times leverage to get that little extra bang for the 1.5 times leverage. Okay, so Tilray, let's take a look at what the media is saying moved Tilray's price up again today. And this is the news story that has brought that about. And it says, and let me put it up on the screen here. Shares of Canadian cannabis producer Tilray surged after it announced approval from the Drug Enforcement Administration to import marijuana to the United States for medical research. The company's U.S.-listed shares jumped more than 20% Tuesday. Tilray will work with the University of California San Diego Center for Medicinal Cannabis Research to study the safety, tolerability, and efficacy of marijuana for neurological disorder. Tilray is proud to support this crucial research, says Dr. blah, blah, blah. And, what everybody's saying is, well, this can't maintain this. This is a big boom, and it's going to have a big bust. And that may be true. But the question is, who has the fortitude to buy puts here and potentially have them run against you for a very long time? I know people have tried to short it. When you have a rip like this, part of the reason is because people try to short it and then buy it back, and there's just not a lot of shares offered. And the people that have their shares are holding on to them, and the actual percent of the float that's trading is not that high. And I got an idea for how to trade this from a guy who is very interesting trader online on StockTwits, and I'm going to pull him. I'm going to say his login is Spit and Shine, and he's been very supportive of me in the past with my videos and stuff. And he's a very smart trader, interesting guy because he trades a variety of issues across the investment world and has his fingers in a whole bunch of different things. So, but you know, I've put a bunch of videos up about calendar spreads trading in, for example, Tesla, RH, and I hadn't applied that to Tilray until today, but I did put some calendar spreads on earlier today, and yeah, I think calendar spreads work really well when you've got a issue with volatility that's really exploded. Tesla, for example, it kind of lost my interest a little bit when vol kind of came in after earnings because it wasn't as much bang for the buck. Before I could put with like $5,000, I could collect over 100 a day in this issue. And now if I put a sample calendar spread on, so for example, right now stock's 277. So if I put the 16 NOV 275 call, if I buy that call, and if I sell the second week out 275 call, so I have a long call calendar. If we model this, and let me just make sure I don't have other trades on here. Okay, so I have another trade on here. Okay, so if I model this, it costs me almost $2,000 per time I do this, and I collect $32 a day. So for $5,000, I'm going to collect a little over five, actually around $6,000. I collect 100 a day. So that's reasonable. And that's actually better than I thought it was. But that number was a little higher with the front month really spiking. When you're doing a calendar, you'd love to have the month you're buying be pretty low vol and the one that you're selling be very high. In this case, if we look at October at the money vol and Tesla, and I switch this to implied volatility. So if we look at the 275 strike in Tesla, we've got about 66 vol in October, and 28 SEP, we've got around a 67 vol also. So even if they're both the same volatility, you still collect money, obviously, because the one you're selling is way closer to expiration. But if we look at this similar, if we do a similar type analysis on Tilray, we've got right now at the money is like the 145 strike. We've got for the week with 10 days to go on the 145 strike, we've got about 200 vol. And if we go out to, let's say, December, and we look at the 145 strike, we've got 148 vol. So a little bit more of a differential, but you know, the volatility is so cranked up that you can put a time spread on and collect a decent amount per day. Now, when you have this time spread on or calendar spread, in a sense, you want it to not move around too much. If it makes one rip in one direction, just completely in one direction, too much away from the strike that you put the time spread on for, it's just not going to work out. So you kind of want it to sort of stay a little bit in a range. So the spread that I put on this one is a split. It's a diagonal spread, is what I should say. So I bought October, and I bought a lower strike. So let's say like I bought the 130 strike, and then in the month I sold a little bit higher strike. So this is sort of a bullish diagonal. So September I sold the 140 strike and 145 strike. So so it gives me just a little bit of a long delta in this issue. Now I found doing this calendar spread, it's a little bit safer than selling strangles, because strangles you have naked options and your downside is unlimited. Here with a calendar, your downside is whatever you pay for the calendar. So that's, a little bit safer in an issue like this. This could conceivably double in one day. It could go from 140 to 300. I mean, stranger things have happened, and this thing's all over the board. So don't confuse excitement with making money. We all want to make money in the market. Some of these issues are more exciting, and it's good to have something exciting if it keeps you engaged, but you want to make sure that you're focused on making money as opposed to just having a fun time. I've definitely had some issues with this where, like, I've sold a strangle and it's just moved so much that I was forced to cover a little bit of it. And, that happens. You have losing trades. The thing is if you're selling a strangle for enough, like, for example, I sold a strangle in Tilray for $7. If it starts cranking towards one side and you have to buy one side in a couple days later for, let's say, $5, well, you still could be profitable on the trade if the other side ends up expiring worthless. When you have a really, really high volatility stock and the options vol is cranked, when you sell stuff, you have a little bit of edge in your favor and a little bit of wiggle room. That's the beauty of it. And people get scared to sell stuff and feel much more comfortable owning stuff, but I'm afraid to own stuff on something that's this expensive. Most people who look at Tilray, who are thinking of maybe buying some puts because they think it's inevitable that this thing's coming back down, they'll take one look at the prices in the puts and they'll say, I don't want to pay that much. So, for example, if I look at these 19 October puts, okay, stock's 145. If I say, well, I think it's going to go back down, maybe I'll buy the 120 put. Okay, the 120 put right now, with 31 days to go, is $32. So the break even on that is $89 in the stock. Now, if the stock price is 147, do you really want to buy a put that has a break even of $89? So it has to go down, over $50 before you even break even. So you're right. You buy this put, you're right, and it has to go down $50 for you to even just break even. So that's an example of how much this stuff is just really, really cranked up in this issue. But as I said, exciting. Once again, to find high-priced in volatility stocks, I like to go to barchart.com and check out their option statistics. There's a couple spots on here. If you go to barchart.com, check out options, you can do highest implied volatility, change in open interest, change in volatility. Let's go to highest implied volatility. And you want to pick a higher price, at least I want to pick a higher price stock, and I stay away from the biotechs personally. But other people have different ideas. So let's take a look here. And this farther column is implied volatility. So we've got 900 vol AMRN calls, but it's only a $2 stock, so that's why. But if you get a stock that's like a higher price, like this MU, these puts are, now once again, if you're looking at an option that is like 1 cent bid or something, then that's not going to be meaningful either. But let's see what we have here. MNTA, okay, it's showing 200 vol for the options. It's a $27 stock, so maybe we'll look at that. But you can find some ideas on here. A lot of times you kind of have to weed out some stuff to find ideas, but I love going in. One of my favorite things to do is to look around chat rooms and find things that I haven't heard of before and just kind of research it and look into it, because I know that the best way for me to make money trading is to come up with my own ideas. And the best way to do that is to just open my eyes and look around. All right. So listen, folks, thanks for checking this out today. And we should check out tomorrow. Let's look at UVXY tomorrow and check out the options screens and see what it looks like as far as the latest strikes once they come out for the new reverse split. And they'll be lined up pretty well with VXX just because the same people make markets in both of those. But still will be exciting to see UVXY trading over like $10 for a change. And I'll be excited to see those strikes tomorrow as they come out. And besides that, thanks for watching, and appreciate you all. Appreciate all the support I've been given, and I will see you in the next one. Bye now.
Famous Dave, famous Dave, famous Dave, famous Dave, famous Dave.
Hey, Shadia!